This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Hello everyone, I have an exciting discount to announce. Through midnight, July 7th, there will be a 50% discount that you can redeem at notyouradvisor.com/4th, spelled the number 4, then TH. Welcome back everyone, happy Friday. This is Not Your Advisor with NYU grad. Let's close out the week on a positive note. It was hard to lose money today on Wall Street. Felt like everything was up on the jobs data this morning. If I had to summarize everything today, going into the weekend, I want you all to watch for next week. Watch yields, watch crude oil prices, because it looks like it wants to break out higher right now, and that's important. That might hit us with travel season and July 4th road trips. Watch gold and silver, the Mag 7, because they're still heavily weighted for all of the gains since April 7th. Watch the financial companies like JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, BlackRock, and watch breadth. But with that said, just a quick summary before I jump into the data or the financial data and prices. This morning, the jobs data came out, and it looked like it was an improving data point for U.S. workers, and that was enough reason to rally hard. I just want to point out that if you look at Lisbeth true rate of unemployment, they measure those adults that are underemployed, meaning they make less than a living wage, and that is under 25,000 US dollars per year. 1 in 4 Americans are unemployed with that definition. I do also want to point out that if you look at the chart or the graph from 1995, it includes the headline rate that we all see in CNBC, Bloomberg headlines of 4.2%. We're at a fairly low point, whether you look at 24%, including the underemployed, or you look at the headline number 4.2%. We're pretty low in the range. So why I'm pointing this out is this is typically where we will start to rise in unemployment. Whether we slowly rise and then spike, or just spike immediately like we did during the COVID lockdown, is yet to be seen. We'll probably see a little bit more of like a hockey stick action versus the Eiffel Tower, but this is something to continue to watch. The job openings numbers keeps declining, or available jobs, and AI is continuing to decimate entry-level white-collar jobs in marketing, sales, customer support, customer success, HR, compliance, entry-level legal. And next week, we should see an expansion of the Tesla robo-taxis out in Austin. So if Waymo, Tesla, Uber start to really proliferate self-driving taxis, that's going to be thousands of drivers that will be added to this true rate of unemployment, those that make under 25K, because if you're working Uber, you're most likely also working gig jobs, DoorDash, Uber Eats, and with the loss of a driving income, that won't be good for a lot of families. So let's jump into macro numbers real quick. So looking at NYSE, we had 482 new highs, which is very bullish, versus only 61 new lows today on the NYSE. 73% advancing versus 25% declining.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com
and all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not your advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.